let's talk about some of the biggest earnings reports that just hit for this quarter. And you see the markets are at all-time highs and people are like, oh my gosh, what is going on? And the reason everything is going up is because earnings are exploding. And I'm going to go over 4 reports, 3 of which where earnings have just accelerated, 1 where it didn't so much, but also just talk about the guidance and why I think some of these stocks I'll be talking about are going to be going higher in the future. And then you can kind of learn to actually pay attention to guidance, because that is really the fundamental key that Wall Street pays attention to. Hey, I'm Luke Downey. Here's another edition of Lessons with Luke. I've been investing for a while. I just want to make you a better investor. So make sure to like and subscribe to our YouTube channel. So look, we're in the middle of earnings season. We just had this big sell-off on Monday. People have been freaking out. It was such a nasty sell-off. It was one of the biggest sell days of the year. Typically, when you have a huge sell day, you know what happens? Markets rebound. Why? Because when everyone's selling them, we usually are near a low. And that's what the data has been saying. People are worried about the Delta variant and all that type of stuff. But look, here is the deal. Earnings are accelerating. Guidance is big and positive to the upside. That means stocks are going higher. What do you see? The markets are at all-time highs. So let's go ahead and talk about one stock right now. Let's go over our first stock that is on my radar that had just phenomenal earnings. How many times can I say phenomenal? Well, when you have earnings like Snapchat just reported, it's going to be absolutely incredible. So let's go ahead and look at a chart together, and then I'll tell you about some of the numbers. Share my screen. This is just absolutely gorgeous. Okay, so this is a multi-year chart of Snapchat, and it is absolutely gorgeous. Let me get myself out of the way. You can see right here, this stock just exploded higher. This is after they had their Q2. They just reported earnings yesterday. $982 million for the quarter. This is versus expectations of $845 million. They earned 10 cents, and this is versus an estimate of a 1 cent loss. Okay, guys, when you come out and you destroy it like that, that is a good sign. But that isn't what got Wall Street so excited. What got Wall Street so excited was their guide for Q3. And so they're guiding at a revenue rate of, so they would have 1.07 billion to almost 109. This is versus just over a 1 billion estimate from the street. So look, anytime you see something similar to that, anytime you see a guidance where, analysts are basically caught on their back foot, you can see a stock explode higher. And that's exactly what is happening with Snapchat. It is at not only at all-time highs, but meaningfully so. But that might not have been my most favorite report. I think my favorite report actually happened a couple of days ago with a big semiconductor company, ASML Holding, tickers ASML. Again, multi-year chart. This is an outlier stock. This is just an amazing company. They make a lot of money. And they announced earnings a couple of days ago. I think that was right before this spike. And you can see the stock continues to accelerate higher. But let's go over what the report was. So for Q2, they reported year-over-year revenue growth of just about 51%. And they also guided for the rest of the year a 35% revenue growth for the remainder of 2021. They had a huge buyback. And more importantly, not only, did they do well with what they reported, but what is the most important thing is the Q3 guide. And they came in and said that it'd be 5.2 billion to 5.4 billion euros versus 4.7 billion forecast. And so that is why the stock continues to climb, because the big money goes after that. They go after big growth that wasn't priced into their models. They got to update all their Excel models and everything like that. And then you see a big run to grab more and more shares. But look, let's go ahead, look at another company that just had phenomenal earnings. And I mean, this is a stock that a lot of people haven't really been talking about lately. It hasn't been, on anybody's radar. What stock am I talking about? I'm talking about AXP, American Express. You pull out that business platinum card, it's probably going to be American Express. They came out, had wonderful earnings. They reported 33% growth in revenue to 10.24 billion. The estimates were just under 9.5 billion. So that is a huge beat for a company that's kind of just been chilling, right? But it was enough to get Wall Street excited. And then they earned $2.80 a share versus estimates of $1.64. Why is that important? Because when you make a lot of money, you can potentially pay out a lot of money, whether it's dividends or however you want to help your investors. We know that American Express loves to pay dividends. They've been paying dividends for a lot of times, a long time. I feel like I'm Warren Buffett, just talking about this stock, but that's the winner's circle. So if you come out swinging. And look, so what have we covered? We've covered a semiconductor, right? A lot of people have been talking about semiconductors, the shortages. ASML says, I got somewhere to be. We're going up. Snapchat, social media. So this is bringing up a lot of social media companies are now starting to just gap higher because they're excited. If Snap can beat, if Twitter can beat, so can Facebook, etc. That's what you want to see. Then you've got finance company American Express. Think about all the credit cards that they're processing and all the other companies that are processing credit cards, how they're going to do, right? So if American Express is saying they're doing well, chances are other people are spending other types of credit cards and business services as well. But there was one company today that actually did not do well with their earnings, and they're actually getting pummeled today. And this is a stock that I've talked about before, and it's one that got away from me, and that is Samuel Adams, or basically the parent is Boston Beer Company. The ticker is SAM. Stock is down 25% today, and I'll tell you why. They came out with second quarter revenues, get this, of almost $603 million. That was an increase of 33% compared to the last year comparable quarter. But the estimates were that they were going to have $652 million in revenues. And I think what was the nail in the coffin was their diluted EPS came at $4.75. Where estimates were $6.61. And unfortunately, Wall Street doesn't like that. And then they had to reduce their full year earnings expectations. And anytime you do that, Wall Street really doesn't get excited. And you know what? That is what the lesson is for today is, it's not about where we've been. It's about where we're going. And so if the stocks are telling you, hey, everything is increasing, our numbers are getting better, Wall Street likes that. Stocks tend to go higher. A lot of big money will go into those shares, right? That momentum continues to feed on itself. Thus, you're seeing a lot of great earnings. Markets are at all-time highs, go figure. But even though, you look at Samuel Adams, you're like, oh my gosh, they did revenue growth of 33% year on year. And on the surface, you're like, oh, that's great. But it's not, because it doesn't matter where you've been, right? They not only missed expectations, but they came out and they guided lower. They basically said, hey guys, we kind of screwed the pooch. We thought that we were going to be doing a lot better numbers, but you know what? We're not. And so Wall Street doesn't like that. They sell the stock hard. And that's what's happening with Sam Adams right now. I think that stock in particular is probably going to be under pressure for the next couple of days, couple of weeks till they turn it around. Eventually, it is probably going to be a diamond in the rough that you might want to be considering because it is a great company. It's one that got away from me a long time ago. I think I sold that thing. But even with today's 25% pullback, it's still up multiples of where I sold it. And that's why I hold stocks for the long term, because I learned my lesson. Great stocks continue to go up over time. So again, there's a lot of earnings going on right now. Focus on the guide. That's where the prize is. I'll see you guys next week.